Good afternoon, all. This is Kanchan from Remunance. So we are going
Hi,
to
Kanchan.
Hello. Okay, so we are going to conduct this webinar on topic PF Essentials. So we have a Mr. Vishal Thakkar with us. He is CA by profession, and he will help us to understand the essentials of PF. So over to you, Vishal sir. Thank you.
Thank you very much. I would like to welcome everybody. My name is CA Vishal Thakkar. I am best known for writing about 8 best-selling books for CNBC TV 18. If you type my name in Amazon, you will find my books. I'm an influencer with 2.4 million views on my YouTube channel. I do national television. I have done 24 episodes in Leaders of Tomorrow on Times Now. And I'm a prof with SP Jain School of Global Management for last 18 years. The idea today is that we are going to update ourselves on mastering EPF in 2026. Latest updates, smart transfers, and hassle-free withdrawals. It's a practical, plain language guide for corporate employees. What change, what it means for you, and what to do next. This is not going to be a monologue. It's going to be a very interactive session. So keep your fingers ready for typing in the chat window. Let me start with my first question. How many of you have changed jobs at least once in life? Can you type one in the chat window? Because this becomes very, very important for you if you have ever changed jobs, right? So, okay, we have Neha, Kranti, Shrutika, Kanchan, Jay, Rushal, Santosh, Akshay, Sagar, Akash. Very good, very good. So now let's understand what happens when you change a job. Okay, so uh, in this session we are going to talk about um, changing when you change from one job to the other. How do you update to the HR? What's your UAN number? And how your UAN number remains the same throughout the life, just like your Aadhaar card number or your PAN number. This one, which is there with your PF authorities, remains valid for life, and why you should not have more than one UAN number to seamlessly transfer your one PF account to another PF account in the new employer's case, right? So, why this session? Despite going digital, we have some issues which persist. So, I'm going to help you understand how you can stay away from those issues. Job hopping makes PF management critical. As I said, it is our duty as employees to keep our UAN number updated with our current employer and inform the HR promptly so that he doesn't generate another UAN and starts depositing our PF money in the new UAN account. Don't worry if this has already happened with you. There are provisions to merge two or more UAN numbers into one account and rectification can be done. But for that, the eKYC needs to be done again. So these are small technical challenges that you might face when moving from one job to the other. But of course, stay with me. I am also going to answer your most important question that can I withdraw money if I change my job? What if I have emergency in my life? What if I have a planned big expenditure and I am relying on my PF money to use that source of cash to fund my planned expenditure? All of this will come. So please pay attention to what is going on here, and you may put your mobiles and other things on silent for 30 minutes because this is your money, your cash, and it's very important for you to manage it just like you manage your bank account. All right. So, most rejections are avoidable, and EPFO reforms have simplified things. Government is trying to do its bit. Technology is helping people a lot, and with technology, we can actually confidently say that a lot of things have started to happen much faster than what they used to happen earlier. There were draconian forms for withdrawals. You had to specify a variety of reasons. For each reason, there was a separate form. But all of that has now gone, and now there are only three buckets, which I will talk about later in my slides, of reasons and you have to just check box one of the three in order to complete the withdrawal process. So what you will walk away with: how to transfer PF correctly, withdraw without rejection, understand the tax impact. Yeah. The third most important question that most of us have is that, oh my God, will I be taxed if I withdraw? So are you telling me, Vishal, that there will be double taxation on my earned income on which I've already paid tax? No, don't worry, relax. I have a dedicated slide on which where I will be covering that what happens when you withdraw money, how much can you withdraw, what is the tax on withdrawal, what happens to your contribution, what happens to your employer's contribution, and a lot more, right? If you come across any generic question that you may have, you may put it in the chat window and I'll be happy to address it in the end. If there are any specific questions, I'm happy to take those offline as well, right? So and avoid the mistakes that trap thousands of employees every year, right? So you should thank your employer for actually having this session. Let's quickly revise. Of course, I know you guys know all of this. I'm just going to do a 30-second refresher. What is EPF? Your monthly saving corpus. What is EPS? It's a pension component of your PF. What is UAN? UAN is your lifetime PF ID. It stands for Universal Account Number, because I'm going to use this UAN very often and very frequently in my session. So you must know the full form at least. Aadhaar and KYC, we all know. E-nomination is nominating one of your near and dear ones or loved ones, so that in case, God forbid, something happens to you, they get your hard earned money. Member portal is a portal for claims and passbook. Yes, there is a concept of passbook here. And I would tell you that why you should at least log in once in a quarter and just check your passbook, because we keep on checking our mutual funds, but we rarely look at our PF accounts, right? And then there is Umang app, which government has created to have EPFO in your pocket. And if you have a like a 256 gigs phone, you can always download this app and keep it there. So that's the full toolkit. Now let's see what has changed in 2026 and why it matters to you. So latest EPFO updates. Welcome to EPFO 3.0. That's what the government says it. The EPF scheme 2026, notified under Code of Social Security 2020, replaces an age-old act of 1952. It's a digital rollout. Government says auto claim settlement. Now the good news is that any claim less than 5 lakhs, where I think 80% plus of our employees lie and they withdraw less than 5 lakhs at one go, are settled automatically. There is no, I'm so sorry, there is no manual desk for review, and hence far fewer delays. So this is the biggest headache that government has solved. Instant withdrawal via UPI and ATM. I mean, of course, it's instant does not mean as instant as withdrawing it from your saving bank account. But once your claim is approved, then it becomes instant. So I would give a safe harbor there. Anywhere service, no fixed jurisdiction. This is another very big blessing. My cousin got transferred from Chandigarh to Telangana, and he was in big trouble because the Chandigarh authorities were not talking to Telangana authorities. There were language barriers and so on. Those horror stories are of the past. You are no longer tied to one regional office. Any EPO office in the country can now assist you. That's a big breakthrough. Automatic PF transfer on job change. Well, it's not really automatic. You apply once on the designated portal, which is categorically saying that you apply. The transfer can then be processed automatically once your identity is confirmed online. So your previous HR puts in your last day of working, your new HR puts your first day of working, and in your joining formalities, when you give your UAN number to the new company's HR, well, arrest is automatic. What changed at a glance? Very quickly, let's look at a few numbers which are of primary importance to you as a person. I mean, macroeconomics we will talk about later. 5 lakhs auto settle claim ceiling. Anything beyond 5 lakhs, of course, it goes through a manual desk and there is a review. You need to keep, ladies and gentlemen, if you want to note down, please note down or take a screenshot of this particular slide. 25% of your total corpus at any given time needs to be maintained as a statutory minimum balance, right? 70, 20, 75 by 25, which means you can, out of 100, you can withdraw up to 75. There are no, I mean, of course, there are conditions applied. So we'll see about those conditions in upcoming slides. There are three simplified withdrawal categories: essential, housing, and special circumstances. I will tell you all the reasons in my coming slides. So stay with me. Waiting period of EPS withdrawal benefit is 36 months. But the tax treatment differs if it is more than 5 years or less than 5 years. So stay tuned for that. 8.25% is current EPF interest rate, declared rate on member balances. So this is what the government gives you. PF transfer, what has changed for job switchers? Do I need to transfer my PF manually? Well, you still apply, but the process is digital and largely automated. Earlier, we had Form 13. Every single time you change job, wait for previous and current employer to both digitally approve, track status manually on the member portal, and old balance often sat idle if you forgot to initiate transfer. This was the old way. What is the new way? Well, your UAN is allotted to you on a permanent basis, one identity for life. You apply once on the designated portal, no separate Form 13 paperwork. The transfer can be processed automatically once your identity is confirmed online. If online confirmation fails, your employer forwards the request. So keep your KYC current on the portal, right? Even with auto transfer, you have to do this every time you switch jobs. Remember, one employee, one UAN, many employers, one retirement journey. This is the slogan that you need to remember. Confirm KYC is verified, not just submitted. Okay. So make sure that your KYC is in the verified status and not just submitted status. Always, always, always use the same UAN. Do not create more than one UAN and request your new company's HR not to create new EAN. Check your passbook, log in 30, 45 days after joining to confirm old balance that has actually appeared in the new account or not, and don't withdraw out of habit. Transferring and not withdrawing keeps your 5 year tax free clock running. More on this shortly. Three buckets. As I said, withdrawals are now set in three simple buckets. Every reason now falls into one of these three. Each needs 12 months of fund membership, and each is capped at your eligible member balance. Essential needs: illness, yourself or your family; education up to 10 times; marriage up to 5 times. Housing needs: purchase of house, flat, or site; construction or home loan repayment; repairs and improvements 5 times in all; special circumstances, up to 2 times in a financial year. No purpose need to be specified. You just tick the box special circumstances and you will be good to go. And same eligible member balance cap, that's 75/25, applies here. Um, the withdrawal rules employees ask most about. I mean, before you jump into questions, I am going to answer all your questions even before you ask. What happens if I lose my job? If I lose my job, up to 100% of your eligible member balance minus your 25% minimum balance can be withdrawn immediately. The 25% minimum balance comes out only on final settlement, which is 12 months after the job loss situation. So if you're like continuously unemployed for 12 months, after 12 months, you can withdraw the minimum balance. From my side, better alternative: if you find a new job, transfer instead of withdrawing, take a final settlement, and on rejoining, the scheme treats you as a fresh member. Okay. Full and final withdrawal, retirement age after 55, permanent and total incapacity for work, retrenchment, VRS or permanent migration abroad, 12 months without EPF covered employment. These are the situations under which you can do full and final withdrawal. Total PF balance is not equal to eligible member balance. Minimum balance is 25% of your total contribution plus interest. Eligible member balance is what is left after setting it aside. So effectively, if you have 100 rupees in your PF account, 75 is your member eligible balance and your total balance is 1. Yeah. Let's talk about Rahul. नाम तो सुना होगा आप लोगों ने. Yeah, how much can Rahul actually withdraw? Okay. So what is Rahul's position today? Rahul has 2.5 lakh in his EPF balance. He has 3 years of service. He has resigned and he's unemployed for 3 months. So his 62,500 is his minimum balance, 25% of contributions plus interest. So now the question is, can Rahul withdraw everything? Because it's a webinar and I have already displayed the answer. You already know, but I'm not asking this question. So, no, no. After resigning, full withdrawal needs 12 months without EPF covered employment. At 3 months, he does not qualify. So, what can Rahul do now? Well, first thing he has to do is find a job. Next thing he can do is he can withdraw up to 187,500 is full eligible member balance. The remaining 62,500 stays protected in his account. If Rahul gets a new job, balance transfers under 1 UAN. If he goes for final settlement, he starts as a fresh member. Takeaway of the Rahul story is that Rahul can access 187,500 today, but transferring and not withdrawing keeps all 2.5 lakh working for his retirement. So basically, yeah, if Rahul doesn't need money, he should transfer and not withdraw. That's the recommendation. Now let's talk about the serious stuff, tax on EPF withdrawal. The 5-year rule, remember this one rule decides whether your withdrawal is tax free or is taxed, right? So 5 years of continuous service counted from very first EPF account transfers don't break the streak. Your entire withdrawal is tax free. Yeah. So if you, congratulations, if you have one UAN number, if you completed 5 years across employers, any number of job hops, no problem at all. Everything in your PF account becomes tax free. If you withdraw before 5 years, your own contribution is not retaxed. Please listen, I'm repeating again, your own contribution is not retaxed. But any ATC deduction claimed earlier gets reversed as income. So if you've made any donation and have taken tax benefit under Section ATC for those donations, well, they would be reversed, not donations. ATG is donations. ATC is the eligible investments. So if you have, let's say, put money in ELSS schemes of mutual fund or any qualified or eligible investments under Section ATC, that tax benefit will get reversed. Employer's contribution plus interest fully taxable as salary income. Salary income. Okay. Interest on your own contribution taxed as income from other sources, IFOS. Okay. TDS, what gets deducted upfront? Below 50,000, generally no TDS regardless of service length. Even if it is less than 5 years, no TDS. Okay. Above 50,000, under 5 years, if you have a PAN number, 10% TDS. Above 50,000, under 5 years, without PAN, 20% TDS. Low or no taxable income, submit Form 121 to avoid TDS, replaced under Form 15G, 15H from FY 26-27. So yeah, you can, exempt TDS if you are at low income group. Why claims get rejected and how to avoid it. Very quickly, I'm going to cover this. Name mismatch. You are R. Sharma in your Aadhaar card, and you are Rahul Sharma in your PAN card and stuff like that. If name is mismatch, date of birth is mismatch, KYC is pending or unverified, if your IFSC code is not proper, if you have put in wrong details, exit date not updated. Now this is yellow marked. If your previous employer hasn't marked your date of exit, your claim stalls, and overlapping employment records. God forbid if two active employers are there on your UAN at once, it confuses the system. So you will have to go back to your old employer and get your old records closed. Yeah. These are one of the five avoidable issues. Almost every rejection traces back to one of these five. Case one, uh, yeah, a specific query from Kranti. We'll address it once my slides get over, which is just one or two slides away. Let's see which case you guys fall into. The silent old account. An employee changed job 3 times in 6 years without checking PF status. Two old accounts sat inactive, still earning interest but forgotten. Lesson: check your passbook after every job switch. Money doesn't move by itself if a step was missed. So it's your duty to check your passbook whenever you change your job. I would recommend just do it once quarterly. It takes 30 seconds. Case 2, the wedding withdrawal surprise. An employee withdrew the maximum available from their PF at year 3 for a wedding, expecting it to be tax free. TDS was deducted because service was under 5 years. So the lesson here is please know your 5-year rule before withdrawing. A small delay or a partial withdrawal can save real money. Case 3, the rejected claim twice. A claim was rejected twice for a one letter name difference between Aadhaar and EPF records. A joint declaration form with the employer fixed it. And the third attempt was approved within days. Lesson: fix KYC mismatches before you file, not after rejection, right? So this is your checklist. I would want you also to take the screenshot of this slide. I think the most important slide of the day. Do these 6 things and you will avoid 90% of your common PF problems. Keep KYC evergreen, one UAN for life, complete your e-nomination, check your passbook quarterly, transfer as far as possible, don't withdraw, and use Umang app to track everything. I think Umang can be quite helpful. So please take a screenshot of this slide. This is your personal action list. Uh, let's uh, let's go to Q&A session now. Now the floor is open for question and answers. I've got two questions in the chat, but before I go there, I will cover some four FAQs here, which are there on my slide. Do I need to withdraw my PF when I resign? The answer is no. It is usually better to leave it and transfer it to new employer. It keeps earning interest and preserves your tax-free clock. Can I have two UANs? You shouldn't. If it happens, get them merged through your employer or the EPFO portal. A duplicate UAN causes ongoing transfer issues. How long does a claim take now? The most important question. Auto settled eligible claims can clear in days. More complex ones still involve employer approval, so accuracy of details matter the most. Is PF withdrawal always tax free? Well, only after 5 years of continuous service it is tax free. Earlier withdrawals may attract TDS and affect your earlier ATC claims, right? So, what are the key takeaways? Transfers are largely automatic now. You still need to verify your KYC and UAN linkage every time you switch jobs. Withdrawals are simpler, three clear categories, but 25% always stays back as your minimum balance. The 5-year rule is the single biggest factor in whether your withdrawal is taxed or not. Almost every claim rejection is avoidable. It's about accurate KYC and not your bad luck or your good luck. Five, yes, if you keep your UA and your KYC clean, your PF does follow you correctly every time you change jobs, right? So thank you very much, guys. Let's open the floor. What's your PF question? For any account specific issues, raise a request via the EPFO member portal or Umang app, or reach out to your HR or payroll desks. So that's about it for my presentation. Now let me go to the questions that are being asked. Let me go to the chat window. Okay, one basic question: how employer-employee contribution together is bifurcated at PF, and do we get the whole amount once we withdraw as full and final amount, or a part is retained? If yes, how much and what amount is paid to the employee? So let's take this is not one question, these are two questions, rather three. So employer-employee contribution, mostly 25% of your total CTC is your PF. 13% is coming from employer, 12 comes from you. Sometimes it's 12 and a half, 12 and a half. Sometimes it's 12 plus 13. There is a formula, but it totals to 25. Okay. Full and final, you cannot withdraw unless you are like unemployed for 12 months. 25% minimum balance, like you have to keep minimum balance in your savings bank account. Here also you have to keep 25% minimum, and balance 75% is withdrawable, right? So I think, how much amount is paid to employee? Yeah, 75%, up to 75%, depending on your discretion. You can withdraw less, but the highest is 75. Okay. Now that was what was Radhika's question from finance. Now let's go to Kranti's question. My previous employer has not deposited my PF contribution since Jan 26. I have now joined a new company. My current employer has started contributing in the same UAN. If my previous employer deposits PF contribution at a later date, after my current employer's contribution have already been credited, will those delayed contributions still be credited to my existing EPF account under the same UAN? Will both previous and current employer's contribution be reflected together? Or is there any additional process? Just one thing that you should do, Kranti. Ideally, it should happen automatically, but just ask your previous employer to update or confirm your date of exit on the portal. If they have done that, see, any delay in deposit by them will attract penalty and interest to them. Okay. But even if they deposit at a later date, it will get reflected in the same UAN number. Just go to Umang app and see, whether your date of exit has been updated by your previous employer or not. If not, connect with them, and then you can actually, reach out to them. So first check. Akash says, you're welcome, Radhika. My previous employer was contributing to the pension under my PF account, but the pension contribution is not reflecting from my new employer. Please get a screenshot of your passbook and talk to the HR department of your new employer as to why it is not reflecting. My pleasure, Kranti. Any other questions? I still have about 7 minutes remaining for the session time. My pleasure, Akash. Neha, what is the EPF 8.25? We covered it in the slides, but doesn't matter. My pleasure. Any other questions? I have one UAN but different member IDs from current and previous employers. I want to merge. Please go to the portal or go in the Umang app and fill up the application for merging. That is the best way. And if suppose you keep getting stuck, go to your current employer's HR team. A joint declaration will help you to sort it, but that is at an escalation. Try doing it by yourself on the portal first. How to transfer PF when organization PF was saved under trust. This is not happening online, Shrutika, because from trust to company, when you are migrating, you will have to go to your local regional PF office. I would recommend you to get in touch with your current employer's HR department. They will connect you to the right people in PF who they are dealing with on a regular basis, because every company has a PF consultant who kind of takes up such kind of queries. So they will help you because it is a trust. It is still not, the portal is still not that intelligent that it picks it up directly. But yes, if it is under one UAN, and if the UAN was generated by the trust, in case of your previous employer being a trust, then I think it should still happen automatically. If not, your regional PF authorities can help. My pleasure, Santosh. My pleasure, Shrutika. Any more queries, guys? Any questions? I'm happy to help. Okay. Rushal has a long question. I was employed by an merger, not later demerger. This is on my. There is a merger application online, as I told to other people also, Rushal. Go there, go use Umang app or the portal and apply for merging of two or three PF accounts. Give all your details, get your KYC verified, and it should become unified. Radhika, what is a pension fund? I will come to it. EPS contribution deducted on higher wages means. Wait. Pension fund is a fund where you keep depositing money and for a certain period of time, and after you retire, that money comes back to you in installments as pension. That is a simple understanding of a pension fund. There are many hybrid varieties where you contribute. There is a lump sum investment pension fund. There is a staggered investment pension fund. There is a insurance linked pension fund. There are a lot of it's like flavors of ice cream. But basically, while you are earning, you contribute, and once you retire, you get back. That's the base plain vanilla flavor of pension fund. I hope that helps. Santosh says EPS contribution deducted on higher wages. Where are you getting this? I don't know. I didn't get the question, Santosh. Okay, now you have clarified. I have one UAN but different member IDs from current and previous employers. The same solution that I gave to Rushal applies to you, Santosh. Go to the portal, merge it, and you'll be done. See, you can have different employer IDs, but so long as your UAN is same, that is least of the problem. If you have two UANs, then you have to go for merger. But member IDs of current and previous employers will always be different. Hold on. Rushal, Santosh, please listen again. So long as the contribution is hitting one UAN account, merger application need not be given because member IDs will always differ from one employer to another employer. So if you switch job for two or more times, you will have three, four, five, six member IDs. But so long as all member IDs are tagged to one UAN, you are good to go. Just check your passbook whether the money is getting credited or not. That's it. I don't think you have to merge the IDs. Member IDs cannot be merged. Only if you have more than one UAN, they can be merged. I'm clarifying it once again for the benefit of Rushal, Santosh, Shrutika, Kranti, Akash, and Radhika. I hope you guys are clear. So if you have more member, everybody will have more than one member IDs because at one point or the other, we all switch jobs. But so far as your UAN is one, no merger is required. All right. Thank you very much, guys. The last 1 minute left for this session. I can take one last question if anybody wants. Otherwise, we are all good to go. Have a very pleasant evening and keep your money safe. Yeah. Thank you, guys. Bye bye to all the 28 people who joined. Yeah.
Thank you, sir. Thank you for such a informative session. It will be really helpful to us. Thank you.
Okay. Bye bye. Bye.
Yeah.